Ladies and gentlemen, welcome back to another important update on passive income investing. And today I'm going to discuss a few ETFs that have done really good and some ETFs that have done worse, because knowing the past, it gives you a lot of insight of the future. So I'm going to discuss those ETFs. I'm going to show you briefly those ETFs, and then we're going to go into details on each one of them. So the first thing I'm going to show you guys here is the screen of the ETFs that have done well and the ETFs that have done worse. So here we have GOOP. This is a trailing 12 months performance. Is not since inception. I'm going to show you all the data from inception versus now, because this will give you better understanding. So if we look at the GOOP, has returned 123.46%. We look at the QDTE, this is from Round Hill, has returned surprisingly at 38.38 within a 12 months period. And USOI has returned about 38%, very impressive. And we have 3 worst performing ETFs. And again, this is within just 12 months period. So we have BITX. This has returned negative 52%. But there is a surprising twist about this ETF. Yes, you can see here within 12 months period has returned negative 52.34%. But what's the return overall since this ETF was incepted? That's what we're going to see, because sometimes when we look at these ETFs here, say this ETF has done really bad within this period. But if we look at overall since inception, how much has actually returned? So this is something will give you a very good understanding about this ETF or any other ETFs whenever you're looking at them. Now we have NFLP, this is Netflix, has returned negative 24.7, so about 25%. And the last year is BITO, has returned negative 18%. We're also going to look at the BITO overall return since this ETF was incepted. Again, if you look at these ETFs that I have listed here, you don't see any of the YieldMax ETFs because those have a separate window I'm going to show you. And maybe I'm going to make another video just for YieldMax ETFs, but these ones are all ETF providers excluding YieldMax. So the first ETF here, let's discuss Curve ETF, GOOP. If you look at total return since it was incepted, has returned with a drip 172%. So very impressive. If we look at most these income ETFs, when you look at the share price, there's always negative, most of them at least. But this ETF share price has increased by 88.7%, round up to 89%. And if we look at the total return with no drip, meaning you take just distributions without having to reinvest, you up 138%. But if you reinvest all the distributions whenever you get them, then you're up 172%. Very impressive. And compound annual growth rate is 49%, 40%, and 28.9% for just share price. And even dividend, they have been increasing their distributions by 68.2%. You don't see this with a lot of other ETFs. A lot of other ETFs, these two numbers are always down. You might see a little bit of a return here, total return, for example, because this, you take all your distribution, reinvest back. So sometimes you might see even the worst ETFs, you would see this number is positive. But these two numbers, for most of the ETFs that I have looked at, they are always negative. But this is the best, one of the best ETF, right? And guess what? It doesn't pay huge distributions. It's only 12%. That's how much it pays. Again, this is a very good lesson because sometimes people are just going with the ETF that pay the most, but those ETFs tend to have NAV erosion, and that's not good for your capital. But you're receiving a lot of distribution, but at the same time, you're losing your capital. So it's one of those things you have to choose. Do you want just income and losing your capital, or do you want some income and at the same time your capital keeps growing? As we see here, you can see this ETF when, if you put $10,000 when it was incepted, and that was in late 2023, by now your $10,000 with drip would have been like more than double or close to triple, would be like a 27,000, so closer to 30,000 with a drip. And if you didn't drip, of course, you're about 25,000. And one of the amazing thing about this ETF, not only has done a great, let me show you something here. If you look at the GOOP, this is Curve ETF, and we have GOOY. This is from YieldMax. Check the difference in return. This is amazing. So if you invested your money GOOP, you would have gained 160.82% return, cumulative total return since inception. So total return including all your distributions. But if you invested in YieldMax ETFs, you'd only have gained 110.22%. So it has outperformed even the YieldMax ETFs, even though both of these ETFs invested in Google is underlying stock. So now let me show you another comparison chart about these two ETFs. So if you invested your money in these two ETFs, and of course you don't reinvest anything, then on GOOP, you are up 125%. On GOOY, you are only up about 58%. So that's like a half the return you would have get from GOOP. I don't know what GOOP did, but they have done really great. Now, if you invest only 50% of your income, you take a half of your income, you reinvest back to the share price, you'd be up about 139%. And this one, you'd only be up by 69%. And if you invest 100% of your distributions, and then on GOOP, you'd be 161% up versus a GOY, you'd only be up 110%. That's a 50% difference. Very impressive for this ETF. So this shows something, even though both ETFs have the same underlying stock, one of the company can have different strategy. Because the reason why this is very important is because GOOY pays a lot of distribution. They pay huge amount of distributions, right? And then in return, you are now going to grow your capital. So you're getting a lot of distributions. Even though you put back all the money that you have gained, you still come short in terms of return as compared to ETF that only pays about 12%. So what I'm saying here, this is very good educational comparison because it shows you don't just go for the highest distributions, because those high distribution could have higher consequences when it comes to your return overall. Something to keep in mind. Now, the second ETF that has done great is QDTE. This is from Roundhill. This is within 12 months period, but we're going to look overall return since it was incepted. Here, Roundhill Innovation 100 0 day to expiry cover call strategy ETF, QDTE. Since inception, share price is negative 32%. This is what I was telling you. Most of these ETFs, whenever we look at the share price, they tend to be going down. But the only real return comes from distributions. You take away distribution, you put back with the drip or with no drip. So if we account for all distribution, you're up about 34% since it was incepted. And if you drip since it was incepted, you're up about 54%. So that's something, but your share price would have been down. And if we look at the dividend increase, it has been going down. So the return that I showed you about 38%, this is just within 52-week period. So within this 52 period, this ETF has done great, but overall, this is overall return. So if you invested $10,000 when it was incepted, by now your $10,000 with the drip would have been about 15,500. With no drip will be about 13,004 or 5 or 13, or let's say 13,500. The third ETF that has done great is USOY. This ETF within a 12 months period has returned 38%. So we're going to look at this ETF also in details. If we look at this chart here, we can see since inception, this ETF has returned negative 58%. This is since inception. The number that I showed you here, 38%, this is just within this 12 months period. But if we look at overall return since it was inception, it's not that good. Negative 58%, right? And if you drip, you only up about 54.3%. If you didn't drip, you up only about 18%. And if we look at the dividend increase since it was incepted, it's negative 88%. So these numbers will teach you a lot. Sometimes you have to look at an ETF. We say this ETF has done great, it's been doing good, but you just look at the 12 months period. Yes, has done great within that 12 months period. So this is something very educational, guys, because sometimes people only show you 12 months period, 1 year period. You have to go back and look at overall return for those many years that this ETF or fund has been out, because that's the only way you're going to get more informed knowledge and you're going to make best decision based on that knowledge. But if you just look at the just 52-week return and you just jump in ETF, that could have been very bad decision. So you always have to look at the numbers. And that's why I always say on this channel, I always give you numbers instead of jumping to just hypes. Again, because of that, if you want to get more informed knowledge about these ETFs, make sure you subscribe to this channel. And if you like this type of content, as always, please smash the like button. Now I want to show you 3 ETFs that have negative return. The first one here is BITX, has returned negative 52.34% within this 12 months period. But is it all? If you look at this, you say, oh man, this ETF has done really bad. But that, ladies and gentlemen, not informed decision, because you haven't looked at all the numbers. But if we look at all the numbers, we going to learn more. So I'm going to show you here something. If we look at the extended chart, we look at the price of today is $20. And this is Volatility Share Trust 2x Bitcoin Strategy ETF. It's a leverage ETF, 2x return. Whenever there's a 2x, is usually leverage, meaning it will give you 2 times the return of Bitcoin. But again, these type of ETFs are very risk and they can have a huge swing between up and down, because you are getting, let's say Bitcoin goes up by 5%, this will go by 10%. And if Bitcoin goes down by, let's say 5%, this would have gone down by 10%. And the return is not going to repeat as usual, right? So now, if we look at dividend increase for this ETF, by the way, it doesn't pay that much. It's negative 98%, but check a share price. Since it was incepted, it has returned plus 30%. So meaning if you invested from beginning of this ETF when it was incepted, you haven't lost your money. Compare this to the ETF that I just showed you, QDTE. We saw that share price was negative. This ETF has bad 12 months period, but overall has returned really great. Total return with no drip is 105, and total return with a drip is 74%. Invested $10,000 when it was incepted. By now, your money is not that much, but it's something. You're up about 18,000 and 20,000 with no drip. So you'd have been better off not investing or reinvesting your distributions. Okay, that's this ETF. And I opened the website for this to confirm the numbers. So this is Volatility Share. This is official website. As you can see here, 1 year return is negative 52% or round up to 53%. That's the NAV and market price is the same. But if we look since inception, you are up. And as I've mentioned, this ETF doesn't pay huge distributions. So if we look at distributions for this year, in January, they only paid 3 cents. In February, they pay only 2 cents. In March, they pay 1 or round up to 2 cents. And in April, they only pay about 1 or to 2 cents. That's all. And of course, more distribution are coming up. If we look at the previous year in 2025, they did pay a little bit high. You can see here there was even one time they pay 53 cents, 54 cents. But this time, actually, there's one time they pay even 62 cents. Huge. And in actually December of 2025, they paid 74 cents. So this could have been a distribution, including the capital gain, maybe. That's why they paid huge. But last year they paid really good, but this year they don't pay as much. And that's because of the crypto market volatility. So this is something that you have to keep in mind whenever you look at these type of ETFs and returns for 12 months period versus 1 year period. I'm going to continue to show you more of these ETFs. The next ETF that has returned negatively for 12 months period is NFLP, and this is negative 25%. And the last one would be BITO, about 18%. I'm going to show you these 2 ETFs. So the first one here is Curve Yield Premium Strategy Netflix. The price is $23.05. If you look at the dividend increase, is negative 31%. Share price is bad, negative 7, but it's not as bad as a QDTE. As we see, QDTE was negative like a 30-something%. But check this, with no drip since it was incepted, has returned 57%. And with a drip, you're up about 52%. So the 12 months period can be really deceiving. And this shows you this ETF has done great. Meaning right now, within this 12 months period, this ETF is down. But let's say you invest your money, there is a chance that Netflix will go up and this ETF will make you a lot of money. That's the same thing with the other two ETFs that we have seen. They are down right now, but that's because of their underlying stock. But Curve has done really well in terms of their ETF. As you've seen, the difference between GOOP and GOOY, one from YieldMax and the other one from Curve. So Curve has really structured their ETF really good. I haven't talked much about them, but might have to take a look at them and start talking more about them. And if you invested $10,000 since it was incepted, your $10,000 by now would be $15,732 with no drip. With drip will be $15,200. Very impressive. The last ETF I'm going to show you here is BITO. This was one of the original crypto ETF that came out to the market. And as you can see here, negative 18% round up. But we're going to look at the numbers here as I've shown you from other ETFs. So the price of today is only 10.96. And look at the numbers here, guys. Everything is negative. So if we look at the performance metric here, everything is in red. So we start with dividend increase is negative 90%, share price negative 74%, total return negative 10%. And even if you take all your distribution, you reinvest, you are down about negative 3%. So this ETF has done really bad. And if we look at the chart performance, if you invested $10,000 when this ETF came out, your capital right now would only be $9,698. That's a negative 3% with drip. If you didn't drip, you are down negative 10%. Very sad. So I did one more thing here. I went to the official website, the ProShare, and I look at their chart performance. You can see here, it's BITO market price is negative 49%. Very bad, right? Since inception. So it's pretty much what I showed you from the other independent chart. If you believe in Bitcoin coming up, maybe this ETF can be one of the ETFs that will rebound and do great. But if you don't believe in Bitcoin, then you may want to stay away from this. And of course, there are a lot of other crypto related high income ETFs that you can invest your money versus BITO. For example, YieldMax has MSTY, and there's another ETF from another ETF issuer is MSTY. Those are the ETF that also you can take a look and see if you want to invest your money right now where Bitcoin is down. I personally have Bitcoin, but I buy an ETF, more of a growth ETF. I used to invest in income crypto ETFs, but I really didn't want to do income ETF for crypto. I have other income ETFs for individual stock and fund of funds, but for crypto itself, I just rather just buy crypto itself, like Bitcoin and Ethereum and XRP and Cardano. I think those are 4 ETFs that I have. So now I'm going to show you the top 3 YieldMax ETFs. And the first one here is AMD. Again, this is the last 12 months period. This does not include all the performance from the ETF inception. So if you look at other maybe chart, it could be different. But AMD within 12 months period has returned 137.40%. Very good performance. And this shouldn't come as a surprise because we know AMD stock itself has performed really well. By the way, I have AMD stock directly and I have made a lot of money right now. We look at the CHIPY. CHIPY has returned plus 98%, a 12 months period. GOOY, this is Google. We've discussed about this, is 90%. Both of these ETFs, of course, CHIPY has to do with semiconductor. And we know these semiconductor stocks have been performing really well. So of course, CHIPY would be one of the ETF to perform well. And GOOY, Google has done great. I also have Google as a stock itself. And when you buy the stock themselves, like just not the ETF, not the income ETFs, if you buy the Google and AMD, you usually make more money, but of course you don't have the income. So here it all depends. If you're an income investor and you just want income, you can focus on these type of ETFs. But if you want some income and growth, you can invest individually. Individual stocks like AMD, like a Google, right? And also you can pick some fund of funds like a CHIPY is fund of funds. It doesn't only invest in one stock. So that's my strategy. When it comes to growth, I buy individual stocks. And when it comes to income, I like a fund of funds. Okay, the worst performers for YieldMax, AIYY, 44%, MSTY is negative 37%, and the last but not the least is Fiat. Right now is negative 36%. Again, this performance, as I've shown here, is only for 12 months period. But if we open this and we look deeper, we might see this performance is different because some of them, for example, MSTY, I believe overall is up, but right now within just 12 months period has done really bad. And Fiat is the same thing. If we look at the AMD stock, was one of the worst performers, but now since AMD stock has risen, keep going up, this ETF within just 12 months period has returned really good. But if we look at overall return, it might not be as good as is shown here. So we can look here and confirm, yes, AMD stock has been doing great within the 12 months period, 137%. Now, if we look at overall return though, since it was incepted, share price is negative 45%. And when it comes to dividend increase, it has negative 84% dividend increase. That means it has not increased its distributions. Total return with the drip. So if you drip, you take away your distribution to invest back to a stock, you're up 192% since its inception. And total return with no drip is 57%. What I can learn from this, especially when you look at the difference between 52 and overall return, is that it all depends on its underlying stock. Yes, you're not going to have the same performance as underlying stock. But if you're an income investor and this ETF are really down, if the stock or the underlying stock comes up, especially if the ETF is not too leveraged, you always going to have that upswing. So maybe it's a good idea to pick some shares when these ETFs are down. If you have a confidence in that underlying stock that you want to invest in that ETF. And on this channel, I always bring the stock analysis because we going to look at underlying stock and see all the metric, how much money they make and what's the valuation of that stock before you can buy any of these single stock ETFs. And if we look at one of the worst, for example, MSTY, if we look at overall right now within just 12 months period is negative 37%. But if we go to, let's say, since it was incepted, we look here, it has returned with the drip 108 or 109 round up, and total return with no drip, you're up about 144%. So even though it shows you has negative return, but overall you are pretty good. But share price is negative 75%, and dividend increase is negative 97.3%. And this is because we know MSTY sometimes used to pay huge distributions and then they pay lower distributions, but recently they've been paying very low, and that's why this number shows a negative dividend increase. That means they are paying a little bit less than they used to pay when the ETF came out. So ladies and gentlemen, I just want to make this video to give you an update on high income ETFs that have performed really well and ETFs that have performed really bad. Looking at their numbers, look at their characteristics between a 52-week range and overall return. This will give us a good insight of how to pick these ETFs in the future and make sure we make a lot of money going forward. So if you have any question, make sure you leave in a comment below. If you have any suggestion of a new ETF that I should talk about, please let me know in the comment below as well. And if you haven't subscribed, what are you doing? It's very easy. Just click that subscribe button and you're going to get one of the best information you can ever get for these high income ETFs. And again, if you like this type of content, as always, please smash the like button. Thank you very much for watching. I'll catch you next video. Bye bye.